So the markets have been quite volatile lately. I'm sure you noticed that. So what are your thoughts on this, and what do you think is causing the volatility?
Look, I think we're starting to see bond yields around the world really move higher, and that's created, I think, the volatility that we're seeing in short. Effectively, we've had depressed yields for a very long period of time. We've had a lot of quantitative easing, which has depressed risk premiums in markets, which has depressed yield, and we're starting to see that unwind somewhat. I think what's also creating a little bit of concern is the fact that Donald Trump, he's announced a stimulus package in the form of infrastructure spending. He's announced a series of tax cuts, and this will probably see the budget deficit in the US blow out from, say, 3 to 5% at a point in the economic cycle which we've probably never seen before. So the US is at full employment at the moment, and this extra boost of fiscal stimulus at an interesting point in time is causing the markets to question whether yields are going to raise not only higher but faster than they're initially anticipating.
So in a sense what you're saying, because Trump and his administration is going to be looking for money, that's demand for money, interest rates go up, and that then people say, well, why am I in the stock market when I can get risk-free US bonds at higher rates?
That's right, and there's also a negative valuation effect on equities. Mathematically, as bond yields move higher, your risk premiums move higher, equity valuations come under a little bit of pressure. So there's a number of different elements that are playing into that, and we'll see how that does pan out. Throw in the tariffs as well, and there's a good mix of different reasons why the markets are uncertain, and we're seeing the volatility.